Hello, this is Manish Patel from the EII Capital Group. Today is August 9, 2010. This is the weekly Ichimoku analysis for the U.S. stock market. Redoing it because the video from yesterday apparently had no sound. Sorry about that. Let's begin. This is a disclaimer basically stating this is for educational purpose only. All charts are either in Thinkorswim or TradeStation. Here are my contact details. You can contact us at eicapital.com. Or you can follow us on Twitter at KumoTrader is the username. Let's jump straight into what we typically normally do is look at the ES mini futures. We're going to go look at the weekly chart. If you look at it, basically we were talking about basically a pullback was occurring last week in last week's video, which was right about here. Okay, sorry, right here. So, you know, basically July 26, 2020, July 26, basically we closed below the Cajun Sin. We did try to go above it. Last week we pretty much closed right above the Cajun Sin. However, that still doesn't mean anything. Reason why is we got conflict on the Ichimoku indicators. You could see that even though the sentiment is bullish because we're above the cloud, the Kumo future is now bearish. The Chicago is very close to price. We don't like that. Tinkinson Cajun Sin is bearish too. So we gotta wait and see what happens here. Pretty much drew out two levels here. 1127 and 1140 are the two key resistance levels that on the bullish side on the weekly time frame. We'll see how they are in the daily. But this is a chance for the S&P now. If it's going to go bearish, to sit there and go bearish now. Reason why is this is a thin part of the cloud. So if it does start going bearish, you got a major support here at 1041. If it breaks that and starts going lower, it has pretty much ability to go all the way down to 875. So we're not saying that's going to happen. We're just saying that if it's going to go bearish, this is a great time right now. Otherwise, they'll have to wait till probably next year to go down. Let's go look at the daily time frame. If you look at the daily time frame, let's zoom in. Pretty much like before, got to the top of the cloud, pretty much hasn't yet to break through the top of the cloud. Even today, it hasn't been able to break through the top of the cloud at 1127. So we're just hanging around and basically waiting to see what happens here. If it breaks above that cloud, then it pretty much can get to this next level here, which is the weekly resistance level 1140. But at that point, basically, the Chicago will be going for a thick Kumo cloud. So there's a chance of it sitting there going up to 1140, even possibly getting up to about 1150. And then the key test is going to be at around those levels to see if it's going to sit there and keep on going all the way up to about 1200. So right now, you know, be very careful if you're trading. There's no trades for daily or weekly time frame. But if you're intraday trading, it pretty much can go either way. So definitely look for the trends on the lower time frame and see which direction you want to go. Let's go look at the Nasdaq because we look at that, and the reason why we've been looking at is Nasdaq's pretty much leading the bullish effort whenever we do go bullish. So we definitely want to see exactly where we're at with the Nasdaq and then go from there. Every week we've been saying if you're going to go bullish, go with a Nasdaq related stock, and you could see from here that the future of the Kumo cloud is bullish compared to the bearish on the S&P mini futures. So this definitely is showing you that this has a higher probability of being better for the bullish side. You could see here it's a lot higher. We're getting to these different resistance levels here. And you could see them here at 1910, sorry, 1918, 1938. Let's go down to the daily time frame. Let's see exactly what that's doing. And if you zoom in there, you could kind of see, look at that. Chicago's out of the cloud. We're above the cloud here. So we're going to these resistance levels here. So if you're definitely going to trade bullish, pick a Nasdaq stock. If you're going to trade anything that's bearish, pick a S&P stock. Let's quickly look at the Dow futures, see exactly where it relates to both of those guys. And if you look at the weekly time frame, let's see where that's at. Weekly is barely bullish too for the Kumo future. So this is kind of second ranking to the Nasdaq. So definitely same scenarios as we've been saying. Pick a Nasdaq stock if you're going to go bullish, and pick a S&P 500 stock if you're going to go bearish. We can't sit there and quickly look at the Russell futures. And if you look at the Russell futures, weekly time frame is still bullish here. The key interesting thing here is this thing hasn't still even penetrated the Kijun-sen on the bullish side here, whereas the others have. So this right here, level here at 670 is a key level for the Russell futures, and we're pretty much at 658. If you look at the daily time frame, this is not even above the cloud at all, and really it's got a little ways to go before it gets above the cloud. So I definitely sit there and still state the case where definitely go bullish with Nasdaq stocks and go bearish with S&P 500 stocks. I think if you do it that way, I think you get a lot better chance. If you do if you do pairs trading, I definitely do it that way, that type of scenario. If you have any questions, please contact us at eiicapital.com. The website is going through some changes, so please bear with us. But you have a lot of resources there. Have a good day and have a good week.